All right, traders, it's a pre-market kind of day. Let's take a look. It's a Tuesday. Pre-market analysis, we want to identify some key price points moving into today's live trading session. So let's look left right here and kind of review what occurred on the DSR levels from the prior week. We see right here that the DSR support level held, producing 1, 2 winners on the right side of that level. Let's look left. The level is set based on this symmetrical double bottom right there. From there, we popped back up to the 109.50s, and now we're rolling back over. We've recently broken our DSR support level. I got short right here. Previous structure support is anticipated resistance, and that's what we're seeing so far. So current, we're in a bear continuation pattern. From this swing high, the market declined to this new structure low. In doing so, it broke previous levels of support. So here's our DSR support level right here. Broke below, closed below. First time back. I sold them right here. Already took 22 or 23 pips on the first contract. And as you can see, still short there. I do have a stop above the 108s. And it's very, very possible. Swing high to this low. Fibonacci extension. Left click at A, left click at B. Left click at A, measure that. You can see the beautiful harmonics at work. A 127 extension is 108.05, landing right on top of the 618 retracement. A 1618 extension landing right on top of the 786, producing two areas of Fibonacci or ratio confluence. So if we rally to the 108s, look left, I've got structure here that was resistance prior to the decline to 107.23. So intraday, we'll take a look at this level. And then if we rally to the 108.25 to 35s, then I've got my big Mo right here, 233. I've got the 1618 at the 786. And look left, support for a 50 to 80 pip pop, support. Popped right here, 40 pips. And then finally broke below, closed below. So two key price points right there, 108 even handle in the euro, and then 108.25 to 35 potential sell. If this market continues south, then where's it likely headed? Remember, we issued that buy signal weeks ago at the 105 handle. We had a nice little 400 to 500 pip move off that level. Now it looks like we might try to roll back down. Here's 106.88 for a 127 extension. So if we break below, close below the 107.20s, then we've got 30, 40 pips of opportunity here, trading below the 107s. And then obviously anything that gets back down around that 105, 104.80 level, we can look at long entries there. So there's the euro. Let's go take a look at 6B. Sold the British pound yesterday, or last night, as we took out lows. See the British right here. We had the key price point. So right there's a KPP buy, popped back up. We had the DSR level set on this swing high, and then 1, 2, 3 consecutive tests, 149. Again, look left right here. Look at the DSR levels, just playing a game of Pong here between the two. Buying the support zone with the trend, selling counter trend, buying with trend. And then finally we rolled over and broke below and closed below. So as we rallied back to this area, sold them right here, and you can see I'm going to sell them at 148.29. On that short entry, I'm going to have a point of confluence. Spike high structure, big Mo right here, and then about 30 pips above it, that 148.60, which had relevance here and here as well. Okay, so if we rally to 148.29s, then I'll be short. Probably going to risk 40 to 50 pips. From 148.30, a retest of these lows right here pays 70 pips. So it's a 1-to-1 or better risk-reward ratio on the scalper. And then obviously a continuation move. We've got another DSR level and a key price point right at the 147 even British. So that'd be 130 pips of opportunity to that second target. So again, I can easily risk. I see where my anticipated targets are. I'm anticipating directional movement there. It is with the underlying trend. We made the new structure low, lower high. And now we've retested that low, lower high held. So one of two things. We're either going to break below and close below and go to new structure lows with the trend, or we'll pop back up counter trend, take out that swing high and go to new structure highs, and then we'll look at another big round number, 149. Now let's look at our crude oil. Good directional movement in crude oil. Had a big honkin' winning trade on crude. Left my limit orders in, and it popped nicely. So I had limit orders resting in crude right here. Caught this move yesterday. You see we put in a beautiful triple top. So again, DST traders, owners, right there is a classic triple top with bearish divergence. So here we go, un, deux, trois, 1, 2, 3, and look at the descending relative strength. In other words, divergence. As we test an equal high here at the 148.80 level, relative strength is declining. So the strength of the bull move is decreasing. Thus, we anticipate a turning point. And we roll back over. It's with trend. We have a red big Mo that's descending here with a downward slope, and we had just come off of this new structure low, lower high. Now we've got new structure low, lower high. So crude oil dropped in the horizontal right here at the 148.20 area. Obviously we've got structure, and right there's my turning point, black tip, and extreme overbought here. So any retest of this 148.15 to 20 going to produce a nice sell signal. Those of you that look at the options, we've got 3 or 4 different proxies for crude oil on the equity side that we can talk about, maybe some options trades, USO being an obvious one. And then obviously if you, depending on your equity, any short entries right here, classic 1 to 2 contract day trade, but then also nice risk reward opportunity. 48.15, just a retest of this level pays $700. So I can easily risk 30 ticks to make 60 to 70. A nice 1 to 2 risk reward profile. S&P 500. All right, Spoos took out our 2070 handle. You see I've got a key price point at 2061.50. 2061 even. So I'm on the bid down here at the 61.50 based on that structure. Look left right here. That was our last swing high. Broke above, closed above, came back down the last swing low prior to that nice little 20 to 25 point move. Not only that, but from the extreme swing low to this new structure high, we're at a 50% fib retracement level right there. And then over here on the right side, take a look at this leg right here. We have a swing to that new structure low, followed by this lower high. And then where would AB equal CD? Bada bing, bada beautiful. Okay, so it's a ratio trade completion pattern right there as well. Yeah, there we go. Sorry, 618 retracement of this leg. So remember, we had a buy signal back here, launched right here, and now this becomes impulse leg XA, retrace AB, extend BC, project C to D. Thus, I'm resting right there. Now, let's see this guy right here, see if it's going to be equidistant. Okay, so we look at market symmetry. The value of this rally from 69 to 74, 5 points. Let's see if that 5-point rally reproduces itself right here, which you can see it did right there to the tick. So this 1-to-1 measured move right here, we'll see where we are this morning, gang, relative to our gap. So right up here on the top left-hand side, we have to go to 2074 to go fill that gap. Okay, so I'm going to be watching for sell signals right there at the 2074. And then you can take a look right here. That's back into this structure. So let's go ahead and lay in a key price point right here. This is gap fill as well as structure support. Once broken, anticipated resistance. And then again from the 74s, we rolled all the way back down 12 handles in the S&P. NASDAQ. All right, so I bought the NASI right here at the key price point this morning. I took a part of the position off. Part of the reason for the buy signal, my key price point came in right here, you'll note. I took 2 points immediately, got back in, and then my stupid trail stop on my ATM took me out of that one again, but I stayed long the core position and now up 11. I'm looking for this to roll back to this 43.68 to 71 level, and obviously if we get there, then we will have filled the gap. And you'll see I'm already resting right here, looking to sell that right around that 74 handle on the NASI. Why? Look here. Higher time frame analysis. I'm going to get aggressive here on the trail stops. I'll lock in 56.75, so that'll lock in about 7 points. But I want to be short. Here's overbought, bearish divergence, sell. Overbought, bearish divergence, DSR, sell. So I want to be short right against, I'm just doing some top fishing right there against those swing highs. And then right now we're just getting ready to open. Let's go take a quick look at the Dow Jones. There's the Dow. I bought the retracement right here. We had a beautiful pullback right into the big Mo, and then our classic cluster 3 trade. RSI buried, oversold, bullish divergence, market gapping lower. All right, let's move this out of the way and see what's going on here real time. Crude oil rallying right into that 48.20 handle, bottom right-hand side. So I know I want to be short crude. I've already got my ATM selected. Dow Jones down here, bottom left, got the brickwick bars rolling. And then again, NASDAQ here, long in a different account. I'll monitor the NASDAQ here in the swing account from the 1,000 tick chart. I'm going to let that Dow Jones rally. Obviously, if the Dow pops up and goes and fills the gap, I'll get filled on partial. All right, so NASDAQ go trade right here, top left, completes again right around that structure resistance, big DSR levels. Let's pull this guy down. Let's take a look at crude oil here real quickly. Okay, so this horizontal line right there represents the key price point. Resistance right here, that's the high of the 8 a.m. session to 8:30. Our lows are in at 47.50. So basically a 70-cent range already. Again, wide range in crude oil to open. So I'm going to go ahead and throw a 2-lot in here. I want to be short against those absolute swing highs. There we go, baby. NASDAQ rally here. And then Dow Jones bottom left rallying as well. Yeah, gang, so NASDAQ taken out on a trail stop right there. So nice little winner on the NASI from this 43.50 long entry. So NASDAQ all flat, working orders again, 43.73.75. Now, Dow Jones right here, let's pull this guy up. You'll note the Dow, we've got structure support right here at the 850s. Popped. Here's a retest, double bottom, and then failure. We go to new structure lows at 820. Back in, there's our 850 swing high. Also, go trade, that's the gap open, so that's where we fill the gap. So 17 850s up to 870s. We got about a 20 pip or 20 point offer zone right there in the Dow. Yeah, so just do your normal go trade, your gap open trade, and then remember, fade the fill can be real nice trading signal as well. Now, gang, the one thing to note right here is with crude oil, you'll note I'm going to sell this on the retest. A, it's a key price point, KPP here. So that's SOS 1. Strength of signal 1, we've got a technical level. B, it's a resistance zone. It's the high of the first 30 minutes. But selling right here is counter to this market filling the gap. So we've gapped lower in crude oil. Okay, we fill the gap. There's yesterday's close, 48.74. You can see a 9-cent difference between today's offer zone 1 and the go trade. So this is counter to the gap fill, making it a little bit more aggressive. All right, gang, let's take a look here at the 6E real quickly. If the 6E can break this structure support, could get a nice little run. So you see that we've broken back below fib dots, moved back to bearish candles. Here we got a lower low, lower close at 750. So if we pull back down into this retest around the 107.30s, then I'm going to trail stops into break even or better. I want to give it a little volatility here. Remember, I'm up 25 pips already in my scalper. So right now, if I do get stopped out, it's basically a break-even trade. But I want to give it some room to run. Nice opportunity there back down to the 106.50s. I'll actually put this down. I'll go 106.43, right at our 1618 fib extension and just above our next active dynamic support level. All right, gang, Dow Jones on new structure highs. So remember, I'm long the Dow from our trend trade with the Big Mo, and then again a cluster 3. Let's take a look at that. We're moving towards target, and I'm going to take partial off. So market drives, new structure highs right here, 17.9. We pull back to the first test of the Big Mo after that big move. So I'm going to take this one off right here. We'll take the scalper off, and you'll note my trail stops have trailed based on my ATR settings, or my ATM settings. Okay, so what does that signal look like? Number one, we retrace back down into the Big Mo. So we're right at that BMR, the Big Mo rejection trade. Number two, RSI's buried. Number three, turning point. Number four, followed immediately by our black tip signal. So right there's the classic cluster 3. I love it. Pulls right down into the bottom of the bands right here. Nice risk reward on that one. So you can see right here, I just took about 45 points. And now we'll let the balance of that run. So I'll look for a retest of the current swing, which right now is at the 916. We had an up day yesterday. And then right here, I'm resting just below Dow 18,000 for that secondary target, 17,988. But again, classic. New structure highs, first time back. So here's our analysis from yesterday. Okay, we had the DSR level here. We were in a bear continuation pattern here. Market breaks above, closes above. There's impulse, wave 1. Okay, there's that big monster X to A leg. Then here's retrace, first time back. Now remember, the expectation when we see these types of patterns and these types of moves, let's tighten this up a little further. Okay, so we've been in a bear continuation pattern. So the expectation, here's impulse, XA, retrace, AB, then potential, B to C, and then C to D. Okay, or we might just go here, pull back. There's buying the swing low at 2. We might then press to a new structure high. So your swing indicators, your zigzag indicators are all going to call your 926 right here in the Dow as a swing. Okay, so if we break above, close above, this will produce the new structure high. After that new structure high, we anticipate a higher low. Where might that higher low exist? Then this would be the second time back. So in a classic 5-wave bull continuation move, we look to buy 2, participate in that 2 to 3 wave press, the strongest of the 5, then pull back right here, buy 4 in that bull continuation pattern. All right, now let's move this over and let's pull this down. So remember, we need an impulse move. That's XA, wave 1. In 1 to 2, we want to buy 2, participate and cover half right here, let the balance run, and then look for the new structure high, higher close. If this is 2 to 3, we anticipate another pullback. Previous structure resistance, resistance once broken, anticipated support. We want to buy 4. Then look for a retest of this high, potential new structure highs. So, 1, 1 to 2. Yeah, and again, not to get into ABCs and 2 to 3 waves, very, very simple. The key right here is that price has to make a new structure high and give us a higher close. So again, remember, I always use the verbiage, new structure high, higher close, new structure high, higher low, and then right here is 4. And then we expect a retest of that high and then possibly a move to new structure highs here. Bottom line is we want to be buyers at 2, buyers at 4, and then we want to profit as the market moves here and moves here. Same thing every time. 55 tick chart, 38-second chart, 5 Renko, 6 range bars, does not matter. Monthly charts, doesn't matter. That's what a trending market looks like. And then we look to participate here and here. Yeah, typically that produces really nice risk-reward opportunities. All right, traders, look at the NASDAQ falling hard back into this support level. Now, I want you to note something right here. I want you to note time between tests. Notice here, swing low, lower high, retest. Again, there's that 18 to 30 bar pattern. I bought them on the right side, a little more conservative. Here's a retest of that level, but from the last test here at 622, it's been 2 solid hours. So here's my setup. The left side is the setup side. RSI buried, oversold, SOS 1. At a key price point, key level, SOS 2. I'll move this guy down just a little bit to respect these slightly lower lows there. Now, if I want the double bottom, I want to wait for a retest of the 43.48 level. And then finally, my signal on the right side. A, I can buy the level. That's aggressive. B, I can wait for a retest, then a higher close, more conservative. And then in the past, we've also talked about using our signal bar, our signal moving average, the big Mo, to get in. An 8-period EMA over there on that right side. Okay, so great example. The perfect symmetrical double bottom, buy the right side, more conservative. Here, too much time between the test on this particular time frame. So that's more aggressive to just buy that retest. 8:45, we've got PMI out right now. Chicago PMI 46.3. Then we got 9 o'clock numbers as well.